It is August 11th, 2014, current time 10:37 GMT. Jay Meisler here with the daily Forex trading outlook for an August Monday. Mondays tend to be on the thin side anyway, and even thinner because we are in the month of August. The focus is on geopolitics. It's not quite clear to me what's going on in the Ukraine, although no fireworks over the weekend has seen the market take on a little more of a risk on or relief feeling going into Monday, which is a follow-through from Friday. Now, the real question is how much of the euro-dollar weakness right now is due to geopolitics, or how much is due to fundamental factors which have pushed this currency lower and looks set to probably push it lower going down the road. Right now we have a very short market, and that seems to be one restraint, maybe an invisible hand as well, and you saw my article on that last week. Now, if you look at the euro-dollar, let's start here. I want to go to the 4-hour chart because that's really where the indicator is. You look down here, you have the 20-day moving average seems to be tracking this really nicely, and I would suggest that be your indicator on a daily chart. We tried to do a reversion to mean on Friday. We got up to around 134.33, but didn't get to that 134.45 level, or the 20-day moving average, which was on Friday was 134.65. So I would suggest on a daily chart to look at your 20-day moving average, and the market will stay bearish as long as we're below it. Now on the 4-hour chart, and this is a really interesting one, I've been pointing out for the past week that the one indicator, and I like to find one indicator that's tracking the market, is the 100-period moving average, this green line right here. If you look here on Friday, we got really close to it, but we kept it, we paused above it. So I would suggest, at least on a 4-hour chart, you look at the 100-period moving average. Clearly, to me, that is the key indicator, and if you look here, we have that double top at 134.45. So those are the key levels on the upside and the downside. We have last week's low at 133.33. If we're above that, we're consolidating, and that puts me in that 133.50 to 134.50 range, where 134 will set the tone as we went back below it today, but by not that much. So we're not any stops on either side right now, and that's why the market's kind of trading sideways, but it is Monday. So those are your key levels here and key indicators to watch. If we look at the 1-hour chart, we are now between the 100 and 200-hour moving average. The 100-hour comes in around 130, I'm checking it, 133.78 or so. But as you can see, it has not been a great indicator. This 200-hour was, and then we got back above it, but now we're back below it. So you consider this a false move up here, and the 1 hour is really not indicating much other than we're in consolidation right now. But as I said, you have the if you look at the other charts, the trend is still down and would have to get at least above that 100 period 4-hour moving average, above the 20-day moving average, and 134.45 to suggest that we are in any kind of a pause. Otherwise, geopolitics will be the focus again on Monday. We'll watch stocks, but for the most part, assume the euro dollar is still in its downtrend. Now, I wrote this guide. It's called How to Become a Better Forex Trader. It is pretty comprehensive. You can get it for free. Just click on this link. It's one of those guides that everybody, from no matter what your level of experience, can benefit from, and you will walk away with something that you can use in your everyday trading by taking advantage of getting this guide. So just click on this link. It's embedded in the in this video, and that's it for now. That's it for Monday. Well, good luck, good trading, and we'll touch base again tomorrow.